Good afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. It was a mixed week in North American markets here with the S&P 500 and the Dow Jones Industrial Average posting gains on the week. But with the NASDAQ continuing to slide, again, we continue to see this yo-yo right now between value and growth. With that yo-yo, this does come at the expense of these tech sort of growth-centric stocks that we've seen outperform for the past decade or so amidst a very sustained lower interest rate environment. Again, inflation in that yield curve is front of mind for a lot of investors, which of course comes at the expense of these growth-centric stocks. In terms of this week's Market Watch Weekly, it's pretty heavy on Howard Marks. So for those of you that aren't familiar with Howard Marks, he's a portfolio manager at Oaktree Capital. He manages hundreds of billions of dollars, and he's probably one of the best financial writers of our lifetime. He puts out a quarterly note. That note is definitely followed by a lot of portfolio managers out there. And funny enough, it actually echoes our own sentiment quite a bit, where he's very constructive on the market, but he does call for periodic stages of sort of volatility, which is common in sort of these early stage innings of a new secular bull market, which we believe that we are in. So again, this week's Market Watch Weekly just follows up quite a bit of his commentary. And for those of you that might want a full copy of his report, it's a great read, and we have a copy of that. So feel free to reach out to us, and that's something that we can definitely share with you. Otherwise, hope everyone enjoys the weekend, and we will talk to you again next week. Cheers.